Hey guys, Taylor the GammaEdge here coming at you with a post-market recap for June 5th, 2025. So here, 5-minute chart at SPX. Key thing to note today is that price action explored the full range of our transition zone we'll get into in a second. That was from 59.50 all the way up to 6,000. So levels did their job there. Let's now get into pre-market prep and our intraday tools. So getting into pre-market prep, SPX full complex, call dominated, look good. Something we can see on this structure, kind of universal level that'll be a theme throughout is 6,000 key kind of concentration there. Progressing to SPX full complex, again call dominated above and below spot price. Transition zone 59.80, 59.55. So again, those are just kind of two key goalposts to keep in mind. So all that to say, we really just want to see the market stay above 59.80. Market trend model was constructive. Yes, I know I'm showing today's price action right now. But coming into the day, our view stopped here. We had a nice trend day higher since the Monday afternoon ramp. Last night, we kind of were saying, well, we kind of didn't. What we did say was that, a nice 2.5, 3 day move. Generally, those short-term momentum bursts last 3 to 5 days. So perhaps we're getting a bit long in the tooth. That was just something to keep in mind. It's just situational awareness, really, right? Like this model, all else equal, is telling us that it's very bullish in the short and the long term, but we also have to just understand kind of where we come from, and understanding the context of the market as well, which we'll get into in a second. That 6,000 is a massive kind of overhead level. So now getting to the SPX structure, really the key thing to keep in mind here is our drunken sailor zone is what we call it. Generally, what this zone means is that within the drunken sailor range, the distribution of a positioning is such that it doesn't really have a significant influence on price per se. What's going to have a lot bigger influence is the intraday volume dynamics of, our call speculators can control, our put speculators can control. Are we seeing buying or selling in the market trend model? All of that good stuff. And really, those drunken sailors, what they do is they outline two key goalposts in the market that are quite hard to overcome on a day-to-day basis unless we start to see kind of significant volume drive us through those levels. And today's a great example. 6,000 was the massive level in the structure. We're not able to progress above it. We just did not see an expansion of buying above this strike. So again, this is a key reason why we track these every day, because this was a firm level today overhead. Go watch yesterday's video. You'll see that 59.90 was a firm level overhead. You can also just go look at the change in the structure between today and yesterday. Yesterday, 59.90, there's a distribution and speculation was huge at that level. Today, not so much. So again, key takeaway here, 59.50 to downside, 5,600 to the upside, then kind of a level in between is our transition zone, DEX transition zone, 59.70, 59.65. So right, and then that brings us to price action. We opened at 59.85, just in the middle of the range. Here I have the key levels laid out for you: 6,000, high point 59.50, bottom of the drunken sailor zone, then we have 5,700. And again, there's just a huge oscillation back and forth today. There's really no momentum either way. You'll see that the market trend model net was lower on the session. So right, we bumped our head on 6,000 right here, and then we just never saw really an impulse higher all day from the market trend model. So that was a bit of a tell there that 6,000 was likely the top, and really should not be expecting a massive ramp higher on the session. Just from a tactical basis, one thing that I did today, the trade I took was I went long off this 59.70 level right here. Reason being is A, that's the top of our DEX transition zone. B, corresponded with prior day close. That's just a key reference point I like to use. And C is the 50% kind of retracement mark from this high to the low down there. So, kind of just had three powerful confluences at that level. Very easy to size risk against 59.70. Knew exactly where I was at. And the play up was to 6,000. I think that risk to reward came out roughly 5 to 1. And so, right, that's just what we want. We want to be taking those high probability trades where risk to reward is in your favor. And that was the exact move we got. And then obviously, we sold off to the bottom and then just really chopped around. And then, right, we got these huge sell ballers at the end of the day. No idea if that was related to the tweets and the news and all that good stuff going out. But, just purely on an intraday basis, when we're below the top of the transition zones, like generally not many good things happen from that point down there. So if you were caught long and all this stuff happened, that's just something to kind of keep keep in your mind going forward is, we were below the top of the transition. We were below prior day close, which, price just kind of oscillated around all day. And then we're also below a downtrending VWAP. So in hindsight, yes, I know that looks easy, duh, but it's the reason that you review game tape, right? Is so you can kind of take mental notes of this or write it down, put it in your system so you know next time what to look for. Right, and then reviewing our vol-m command. Again, if you're not familiar with this, we just track intraday SPX 0DT volume, both on the call side and the put side, to understand what the distribution of those transactions are occurring throughout the session. Because by understanding that, we can understand the character of price action, and that can help us also inform of the projected path of price through the end. Keep in mind that we run this chart on a 5-minute basis. So yes, this is obviously the end of day, but say you look at this chart on noon, you're just going to see the activity from here, from the open to there. And then, right, understanding what the calls have transacted, we can kind of get a better idea of how they may act throughout the end of the session, all things equal, which we'll get into in a second. I'm just going to cover the end of the day example here. So, right, a couple of key tells in the morning that I was also looking at during my trade. The put centroid sign was ramping just straight higher, so that's really indicative that no really downside pressure in the market at that point in time. B is once we got to the 6,000 level, we can see that this call centroid was not progressing higher. It was actually making lower highs as price action was at highs. So that's another tell that price speculation is not continuing to ramp higher. And in sessions where, we see price action do this, we see call speculation do this because, right, price follows where volume is occurring. Price does not go where volume is not transacting. And then, right, once we made this high throughout the end of the session, the call centroid character was just lower and lower on the session. Put centroid was very choppy. So, the action that we got, yes, we got pretty big dump there, but just the nature of the action in the afternoon movement making lower highs and lower lows makes a lot of sense in the context of the vol-m tool, as well as our market trend model, which was relatively flat to weak on the session as well. So hopefully that clicks for you and you kind of understand on an intraday basis the importance of just these two simple tools, right? Incorporate our key levels, look at vol-m, look at market trend model. That's really all you need. Or if you already have a robust system, then hopefully, these simple tools, which, you just need to glance at once every 5 minutes or whatever it is, just to understand the kind of general trend of the market, should help you, keep you on the right side of the market, understand character, and then, most importantly, maybe understand where price is not likely to go. Because whether, you're an intraday future scalper or you're an options credit spread seller, this tool allows you to adapt to really any style that you have. And then, right, down now I'm showing you an example of how this looks intraday. Here's the example at 115. It's very clear that, price action made the ramp. We're seeing this, and the call centroid side, that is a move lower. Put side is moving lower. So all else equal, those lines of best fit. Remember, these dashed lines of best fit it's a linear regression of all this activity that's happened here. So, this has been relatively flat. So, it's easy to infer that. Right, and especially if you're a credit spread trader, like this really helps you kind of you can understand where the ranges are developing. And so, right, and this is even super useful too. If we go back an hour earlier to where we made the high at 6,000, again we can see that option volume just really is drying up to the upside, that is. And so with that's what we got for you guys tonight. Again, we keep it simple, just focus on a couple key levels, understanding the structure, and then just using our intraday volume analysis, and we found that's all that we really need to be successful in terms of understanding where the key levels of reference are at, and then staying on the right side of the trend more times than not. But with that, you guys have a great Friday. We'll be on over with our pre-market prep video, and then we'll see you all next week. Thank you. Bye.